What's going on YouTube? Gabe here with the Review Dork, and we're going to talk about 5 things you could do to improve your trading. Now, I don't care if you are a beginner trader or a seasoned trader. Sometimes it's good to just go back to the basics, especially with the market in a downtrend and a lot of emotion being shown on the charts. So we're going to get back to the basics. 5 things you could do to improve your trading. I don't care if you're a beginner or you're seasoned. Let's get right into it. So thing number 1 is to trade with a plan. Trade within a system, such as 1348, shameless plug, link down in the description. People are making a lot of money and they're doing so consistently because they trade within a system. Okay. Just freestyling your way into the markets or, attacking short squeeze plays because they have high short interest. That is not a trading plan or a system. Okay. That is just something that's been made popular over the recent years. But having a system, it's what's going to yield consistent results over and over and over again. And, our community gains channel on our Discord is just proof that people are consistently winning. So again, trade with a plan. It doesn't have to be 1348. It could be a system that you find yourself comfortable with. And it also has to be a system that you can do consistently and hold yourself accountable to, right? No point in having a system if you're going to go ahead and make exceptions to certain rules or break certain rules. That's not going to yield consistent results. Tip number 2, trade in percentages, not dollar amounts, and focus on wins, not gains, okay? What do I mean by this? Well, for instance, if you trade with $100 and made 10% on that trade, you made $10. If I trade with 100,000 and I make 10%, I make $1,000, right? The thing is that we both won, and we both won the same amount. You have to believe in compound interest and how it is, in fact, the 8th wonder of the world. Compound interest is amazing, and you have to subscribe to that thought process. Next step is to avoid groupthink until you're in the chart. What do I mean by that? Well, it's just, it's almost comical, mind-numbing. I jump on social media platforms, I check out stock tweets, I read the Weeble comments, et cetera, and you see so much groupthink, right? And this sort of kind of like lends itself to an individual looking for confirmation bias. Groupthink does not exist outside of the trade. Let me explain. So here we have the chart. Now, groupthink. Those who play the daily, the groupthink, once you're into play, is that it's in a downtrend. But when you go to the 5-minute, there's a different groupthink, right? The 5-minute crowd is able to see that the stock is in an uptrend. The same thing for the 1-minute crowd. Each crowd is thinking differently. So to subscribe to a certain groupthink is actually detrimental because the groupthink exists in the chart and is dependent on your time frame. Technical traders, guys who play the 1-minute, they're going to see the same things at the 1-minute. They're going to see support and resistance. They're going to see change in momentum, et cetera, et cetera. So the groupthink there is, okay, when the indicators show the stock is in a downtrend, everyone groupthinks together and plays a put option or goes short or closes out their position, right? Groupthink does not exist outside of the chart. It exists in the chart and it exists within your time frame, okay? Next up, do not trade emotionally. Revenge trading, after you've lost a trade, you want to jump right back in and get your gains back. No, if you had a bad trade, it's cool. You go back to rule number 1, your system, your plan, and stick with it, right? Emotional trading will lend to breaking rules, unsubscribing to a plan, and will more than likely end up hurting your portfolio over the long term. If you wake up in the morning and you're just not really feeling yourself, don't trade. If you have certain happenings happening in your life and you feel like they're affecting your mood and your mindset, don't trade. Alternatively, you can learn to train your emotions and keep them at the door and know that trading is what you do, but it's not who you are. And then finally, be docile. Now, I mean, the proper definition to docile is be submissive. But what I mean by this is be docile to the trend. As we like to say, the trend is your friend. And the chart, well, the chart gives you a painting of emotion and where the trend is going. If you trade against the trend, you will ultimately get hurt. Now, let's go ahead and look at the chart here, right? Yeah, we saw the peak here in the market, and then the emotions started getting painted into the chart. Fear, interest rates, inflation, right? Recession. All of these fears are painted into the chart. But if you are this crowd here, you can't trade with this crowd here, if that makes sense, right? Be docile. Be aware that the market has shifted and you trade with the trend. Submit yourself to the trend, guys. This is super, super important. And this is why I subscribe to the 1348 methods and, well, thousands of others do as well, because we check all of our bias at the door and we trade with the trend. And we are very, very docile. We are entering call positions, we're entering put positions, we're going long, we're going short, because we want to make money. And the best way to make money is to do what everybody else is doing. Or step number 3, groupthink when you are in the chart. Anyways, that's all I have for you guys. This is Gabe with the Feather You Dork. I'm signing out. Make sure you guys check out the link in the description. And peace.